Ira Epstein, and here we are with your financial market wrap up. And you haven't seen me for a few evenings. I'm doing this on a hotspot right now. I don't have internet. My family and I have moved out of the state of Illinois. Got tired of the taxation and all the problems that the city is having, and we're someplace absolutely gorgeous. But I don't have my internet hooked up yet. They claim they're coming in the morning to do so. I have none of my computers. I'm working on a PC right now, and I should be over the weekend when the trucks arrive, getting myself all set up. I hope to be ready by Monday with a lot more for you. In any case, you're going to get personal income spending in the PCE price index, one of the Fed's favorite numbers, and that's going to come out on Friday morning at 7:30. They're forecasting income up 0.4 month over month and spending up the same amount, so no real gain or loss there. University of Michigan prelim December consumer sentiment indices, well, they'll be released Friday morning at 9, and they're looking for an increase to 52 compared to the prior index of 51. The Federal Reserve, well, they're going to release their October consumer credit Friday afternoon at 2 o'clock, and they're forecasting October up by 10.5 billion, and that's way better than the September number of 13.1 if it comes in that way. As for chart action, I think you understand the markets are building in that the Fed is going to cut next week interest rates by 1/4 point. There's a 90% probability if you go to the CME Fed Watch page. We'll see. If you look at real interest rates, the problem is they're climbing. They're not declining. So while the bets are what the Fed's going to do, that doesn't mean that rates will fall. It could be that what the market is saying is the economy's still strong. The lower interest rates, if they cut them, are they really needed? That's going to be the argument. We saw that while the ADP number was one thing, we saw Challenger Gray today was half of the planned layoffs that they did last month. We saw the jobless claims and continuing claims fall again. That doesn't show a weak labor market to me. And ADP to me is it's one of these fickle markets. Over time, if you smooth it out, it's pretty good. But month to month, I just am not a fan of it. And people have to concentrate because we haven't had the Fed jobs report and things of that nature. You can see bonds and notes tonight are up minor, very minor league. You're still up and have been, by the way, the January Brent has expired. So you've got to make your move now to the next month, which is just like this. And there we go. If it'll let me do this. It is done. So here you go with your crude oil up a little bit, but the market's not breaking. And the reason it's not is because nothing has come out of the Ukraine-Russian talks. So obviously, the U.S. involvement in it, nothing. And I am convinced that nothing will come of it because I think that what you're going to see is Putin's going to demand that he gets that whole region that he wants, even areas he hasn't captured. And if they want to make peace, that's how they got to go about it. Well, what that does is it keeps Russian oil off the open market. I know that China buys their oil. The U.S. isn't going to fight with China over it because we need their rare earths. But it is something you've got to consider. If there were a peace agreement, then, of course, the sanctions would come off the Russian oil and suddenly the floodgates would open again. So things you got to take into account. Dollar index up a little bit against currencies, not really doing a heck of a lot, but it's certainly showing that the 100 level is a rich level for it. When we come over to the weekly chart of the S&P 500 index, and this is just a weekly close, you can see that if the market finished here, it's knocking on the door of all-time highs. When we come over to the daily chart, market's got to prove itself right here. Some people will say that what you have here could be an inverted head and shoulder, a shoulder, another shoulder, and the head of the market. I don't know if that's the case or not, but I know that that's what they'll talk about. And this move today, when you got over here, will entice some people to get more bullish, not bearish the market. So these are things I want you to think about and understand how they're playing themselves out. As long as you stay over the 67.71 level, which is the 18-day average of closes, I like what I am seeing. When we look at the E-mini S&P, the weekly index, you can see that the market has not been able to get up to the Bollinger Band, so there's nothing there that I think you want to do. And when we take a look together at the E-mini S&P, as we get to the slow stochastics, they are in an overbought area, so things we should take into account there. Next, we get over to the NASDAQ. And as you can see in the NASDAQ, you made a run back here. And you got as low as the Bollinger Band at 23,904. And you're climbing all the way back up. And we'll probably be able to talk, are you going to get to the Bollinger Band or are you going to fail right here? Because that's what I think traders are going to look at. Can you get the follow through or not? If you do, the next stopping spot, upper Bollinger Band, 26,091. On pullbacks, I see support at the 18-day average. I am not looking for big breaks in stock indices at this time. I think the market wants to rally into the Fed meeting and then after that maybe give you a break. But before that, I see breaks being bought. Same thing in the Russell 2000. Then when we step over to the, let me come back here. Same thing in the Dow. That's what that was. Here's the Russell. It's even stronger as it's got the higher lows, higher highs. Could reach up to that Bollinger Band. And again, the embedded reading could take place right here with this market now starting to get a series of days where the markets are able to stay over this 80 level with both the red and the blue line, the K and the D. That's called embedded, and that adds strength, not weakness, to the market. In the DAX, when we got down into this zone, just before I stopped recording it, I kept saying, I think it's too cheap. I think you could rally back to the 18-day average, and it's done a nice job of that. The market is in an uptrend, not overbought. 100-day average in green is your next resistance point. In the 10-year notes, we're still dropping away. And by the way, these are Indices, so I don't even like that I've still got these up there, okay? I'll have to change them the margins, and I thought I had done it. That's my fault. It just got by me. I apologize. But it is correct to have the Indices in the dollar index. That market, as you can see, has come down and found support, while the euro has rallied up and over the 18-day average, actually saying it wants to be on the friendly side of the market. The pros will probably nibble on the long side at the 115.72 level with stops under yesterday's low of the 115.15. I don't like that kind of risk in it. It's about $600. I think we can do better. The yen finally got up to where I told you it could, the 18-day average, when it lost its bearish embedded reading, and I think it will run out of momentum there, so be careful for the near term. In Bitcoin, we are back to the 18-day average. And as I'm looking at this, again, I want to get into the newer contracts. So I didn't have time to do it. I was so excited to do an update tonight. All the energies, look at them this way. They are fighting their battle at the 18-day average of closes in both the Brent and the WTI. You've fallen back in the heating oil to support for the market now at the 100-day average, and you're trying to find resistance in that gas at the upper Bollinger Band due to the cold weather that is all over America. I want to remind all of you that there's only 2 days left, 48 hours on our sale, and it's going to come to an end. 1/3 off any of my morning futures video subscriptions, the Spider ETF, the combination of the two, we call the combo package, or 3-month packages where you get 1/3 off. And of course, the other thing that we have is our 1-year course, 1-year futures, which is a big savings right there. And take a look at what you're getting on the other areas here. If you want to take any of the courses, they're great gifts to give away. They start when you elect to start them, so you can wait until after Christmas or do it during Christmas, whatever way you want to go. You get the charting software, access for a couple of weeks to my different videos and my written updates. It's a neat thing. I'm Ira. Just go to iraepstein.com. That's the way that you get all this, and go to either courses or research. You have a great day.